Everybody, it's Brian Shannon from AlphaTrends.net. Today is Friday, the 9th of December, 2016. Hope you had a good week for the markets. If you were short, then perhaps you didn't. But, we're in a primary uptrend, and news and surprises and consolidations tend to continue in the direction of that primary trend. The S&P and the Nasdaq up more than 3%, Russell and the banks up over 5%. Biotech's lost a little bit of ground. They've been the weak group and have been trying to recover but unable to do so. And the bonds really continue to be a very weak spot here. So let's take a look. We'll start with the daily time frame. If you recall, coming into this week, we were talking about the prior resistance, how it had the potential to become support, but we weren't bullish coming into the week because we were below that declining 5-day moving average. However, on Monday, when we gapped above that 5-day moving average, I had posted a tweet that I share often about markets being able, once they get back above that declining 5-day moving average, when the primary trend is higher, that they often continue to move higher. So we remain in a primary uptrend to try to sell this market short for more than this. The quickest scalps is really kind of foolish. Even today, we maintained above that volume weighted average price for almost the entire session, and we got right up to the daily R2. So I had posted about pivots on Twitter. Hopefully you'd seen that. That's part of the Alpha Trends course as well. But nobody knows how high this market can go or will go. But the fact is, what we need to do is be aware of what our time frame is and manage risk. Does it make sense to buy up here to be that guy? Perhaps if you have a tight stop that makes sense to you. I think the intermediate term trend, we're going to still continue to treat this as innocent till proven guilty as long as we're above this rising 5-day moving average. Now, perhaps Monday we come down to that. I will still be bullish on an overall basis, but of course, adding at these levels doesn't make sense, not to me in my personal time frame, but of course, always do what's right for you personally. The NASDAQ got back up beyond that 50-day moving average, and now we have the 10, 20, and 50-day moving average, showing that this market has been, as we've noted, in this bigger box here, and the primary support has been down in this area, the primary resistance up here. It's not typical that markets will break out from an extended level like this, meaning that it's just come from 115 to 120, but I certainly wouldn't sell short. This is what I was hoping would happen for today that I pointed out to subscribers last night, hoping that we could see a pullback. Obviously, that didn't happen, but we are at the top end of the recent range, but there's no evidence that this will become resistance. So know your time frame, continue to give the benefit of the doubt on the intermediate term trend to the buyers. The buyers took control in the NASDAQ. It wasn't till Wednesday that they made that higher high above the flat to rising 5-day moving average. That's when the buyers took control in the NASDAQ this week, and we're right at the top end of where we've seen resistance in the past, and might in fact be resistance once again, but we have an uptrend here with buyers. It would be foolish to sell short up here, just as we've been talking about these the Russell 2000 for the last couple of weeks, saying that this was very reminiscent of the semiconductors and their strength, their persistent strength over the summer, that with selling short in here was really a foolish game, except of course when we're below that declining 5-day moving average and making lower highs and lower lows, then you can err to the short side if you're a very aggressive trader. But once again, we got above that 5-day moving average, made a higher high, and just off to the races once again, showing that when the primary trend is higher, it may seem extended. There's no such thing as up too much if there are still buyers in this market. And whether those buyers are just people who are covering their shorts, or if it's new money coming in, you have to learn to ignore things like presidential election predictions and Brexit predictions and Italian referendums and that sort of thing, and look at the market and say the only thing that matters is the market price action, and how can I profit from that? When we're above that flat to rising 5-day moving average, anyone who was short should have covered in here, and it reversed to the long side because the primary trend remains higher. Semiconductors, really surprising to me how quickly they came back. I was suggesting that they would probably consolidate in near this 5-day moving average and give a better opportunity for a purchase, but of course they didn't. So I didn't get involved long, but I also didn't get involved short. So there's no point in fighting the market trend. If there's something that you don't agree with, or you look at it and say, that move doesn't make sense to me, it doesn't mean you should sell it short. It means just leave it alone and go to something that does make more sense. We've been talking about these biotechs, and you can see that I've drawn some lines in here. I put those in for subscribers in the midday video today. But here's the action in the biotechs, and again, we're going to reference, because it has been important, the year-to-date volume weighted average price, which right now we're closing pretty much just under that. You can see that the year-to-date volume weighted average price is what is this price level? At about 274.5-ish. So, this has been in a bigger range for most of this year. Outside of the first couple weeks of the year, the biotechs have been pretty much range bound. If they don't scare you out on the way down, they will typically wear you out. So is this market building energy for a break to the upside next year? We simply don't know yet. Or is it consolidating before another leg lower? If you remember, they were supposed to rally because of a Trump administration, but we've seen this has been the worst group. They're still up since the election, which was right over here, of course, so they're still above that level, and that level was tested this week. So perhaps this was a flush out as we tested that level. Tough to say, but here's what could potentially turn this market higher in the intermediate term. One, this trend line, we broke that today, but we're unable to hold above it. So that remains relevant. And as I said, this is what I'd mentioned to subscribers in the midday video, that if we saw it pull back down towards that 5-day moving average, run up towards this resistance, and then pull back and make a higher low, then we would perhaps want to purchase it here with a stop underneath this higher low. So that'll be something we're keeping track of for next week. If you look at since that gap lower 3 days ago, we're holding above the volume weighted average price from that. So that tells me, that on balance, the last 3 days, even though we've been weak, the average participant is feeling better about it. So this might be the beginnings of a change in trend, but we simply don't have that evidence. Next week, I think that it'll be good to pay attention to a stock like OPK, which has a rather large short position of 71 million shares. You can see it's still in the stage 1 accumulation, but energy seems to be building here for OPK, and maybe it's going to take a move back above this level here. I'm not certain yet, but an absolute worst case stop will go below this low from Thursday. We had this DNR on our watch list multiple days this week. It still hasn't given us a reason to purchase. Perhaps next week, if it can get above this little band of resistance in here with a stop just under 375-ish, might be a decent opportunity for next week. We got involved in GSM just today, right as it was breaking this resistance here, and that's a good looking longer term chart. As we got involved in Whole Foods as well. Whole Foods, if you look at the monthly chart, I mean, it's been beaten down, and we got involved here today. We got involved in Whole Foods yesterday over here. Our initial stop was under that 5-day moving average, and now our stop is under this level. So ATI is another one we're involved in. Big short position here, 22 million shares, and this is a stock that seems like it's breaking to a stage 2 uptrend on the weekly time frame, just like we got involved in Potash. Potash broke to new yearly highs. We were involved, prior to that, we were involved over here and still holding a partial position, as is with DISCA. We actually got stopped out of this one today as it broke below this morning's low. But these are stocks that have longer term potential as well if you're an investor. We're also involved in SC, which has had a nice run. For next week, I think that if you're looking for short sale candidates, then you look for stocks that are in downtrends, stocks like MANH. Now, I'm not saying it's a good short sale because short sales are very difficult in a bull market, especially one that's as strong as this one. You have to be very quick to cover. We got involved in Viacom as a short. If you look at this daily time frame, it looked like it was on the verge of breaking down over here. And what we had done was to short it in this area. I remember if it was, I think it was this day we got involved. Anyways, we were stopped out of it right here as it broke back above this level here. And that's how aggressive you have to be to cover your shorts, especially because otherwise you're going to get squeezed really hard. So I hope everyone had a good week of trading. And let's take a look at those bonds real quick because they just continue to be just a horrific downtrend. Just as the S&P 500 is not up too much to attract new buyers, this is not down too much to attract new sellers. It's in a downtrend. It's guilty till proven innocent. Talk to you next week. Thanks.